Hello, I'm Liz Lumley of Finextra, and today I'm speaking to Marc Wood and Mike Zehetmayr of IBM, and we're going to talk about risk data aggregation. So, the Basel Committee set out principles for effective RDA, way back in 2013, and those principles really sort of form the basis for RDA compliance, which is due January 2016. A lot of banks are still in a lot of early stages for RDA compliance. So Mike, I'm going to start with you. Why has the process been so slow?
So I think the process has been split into two. One is around people understanding the impact, and then the second is people understanding what practically they need to do. And I think that if you look at what the Basel Committee shared, was that it was a set of direction rather than and principles rather than what we see as regulation, which specifies exactly what you need to do. And I think that there has been a lot of work being done by the industry to understand the implications to their organisation and what they need to do. Unfortunately, people are now focusing on now as to practically what they need to do. Part of that's been driven, I think, there are three things that's driving that. One is every bank has a very large regulatory agenda that they need to comply with. There are competing priorities around EMIR, Dodd-Frank, which clearly overlapping domains with RDA, which the banks have had to comply prior to complying with RDA in 2016. I think there's the second bit, which is if you look in it, the RDA and the principles, there are sort of 14 principles, there are 89 requirements set out there within the documentation. That takes time to be able to look at the implication across the business, across finance, across operations, across risk, understanding what the IT response to that will be to be able to support that. That has been complex, and that's where people have been focusing their agenda. I think the third area is that there is a decision to be made as to recognising the competing priorities within a limited set of investment that banks have is how far do they need to comply by 1st January 2016 as a globally systemically important bank to be able to meet the minimum requirement or exceed the minimum requirement that a bank regulator or the regulator of the bank is expecting them to comply with.
So Mark, Mike has told us about sort of this journey that we've gone on from principle to regulation from 2013, moving on to 2016, and also brought up this, the reality of these competing regulations that banks have to deal with. So, but what do banks have to do to comply with RDA by January 2016?
So that's an interesting question, and I think that's probably the million-dollar question for a lot of banks. I don't think they're actually entirely sure, as Mike said, because it's a guiding set of principles rather than the clear set of requirements which are defined as some of the other regulatory initiatives or regulatory requirements that have been out there previously. It's not clear to banks exactly what they have to do. There was a self-assessment done by each of the 30 global systemically important banks back in 2013, and there were three areas where they were materially non-compliant. So the self-assessment that they performed was done on a scale of 1 to 4, 4 being completely compliant and 1 or less being materially non-compliant. And there were three key areas where the banks were non-compliant. One being around architecture and IT infrastructure.
That's not surprising.
No. The second being data quality, and then the third being around the process itself. So we as IBM think there are probably 3 or 4 fundamental things that banks really need to address in order to make the 2016 deadline, or at least embark upon the journey for that 2016 deadline. The first one is around data quality. From a priority perspective, you really need to think about the lineage of your data, the source of that data, and the provenance of it, so that you can actually prove that. The second is around really architecture, and from architecture, it's not just the IT architecture, but it's the data architecture too, and the application infrastructure that underpins that. And then thirdly, it's really around having the right skills. So if you think about RDA as a concept, it doesn't just touch on the risk area, but it will touch on risk, it will touch on the business from both a front and back office perspective, and it will also touch on finance and fundamentally technology as well. Technology is going to be the engine of change when it comes to implementing RDA. So it's really having the right skills from both a data and a risk perspective in all of those areas in order for the banks to actually make the step change that they're going to need to do in order to become compliant from 1st of January 2016.
So it seems like 2015 will be the year of work on RDA.
Yes, I think it is. I think absolutely it's going to be that. Interestingly, what we've noticed with some of our banks that we're working with in Canada, Canada was actually, the local Canadian regulator, the OFSI in Canada, actually mandated that all of the domestically systemic important banks in Canada actually had to comply with the RDA principles by the 30th of October this year. So actually Canada have actually set the agenda, I think, in terms of, and there are probably some learning points that the GSIBs can take from what the banks have done in Canada. I think probably for me the key one is actually working together collectively. So all of the DSIBs actually worked together with the Canadian Bankers Association to actually define what are the data quality and measures that they are going to report on back to the local regulator, and they worked on that together and agreed it as a collective. So I think for any of the GSIBs in any of the local geographies which are going to be impacted by RDA, it would be sensible for them to also work together collectively.
So look to Canada for best practice.
Yes, as a start.
Yes. Excellent, Mark, Mike, thank you very much.